Everybody. It is March 16th. Welcome to Money Printer Brr, whatever. What are we calling this show? Could be anything. What are we doing? Whatever. It is a wonderful day in the markets because the markets are up, and that's a weird thing for us. We don't usually get that in a negative momentum environment, but we're very excited because it is the morning burr. We've got a beautiful sign. We got some Bob Odenkirk over here. Morale is high, Ugh, unless you're looking at oil prices. But hey, today our rundown is pretty simple. We're going to talk about Fed Week. The Federal Reserve is going to meet on Wednesday, and I couldn't care less because the Fed funds rate does not matter like it used to. It's not 1997. We aren't listening to Veruca Salt. Is that who? What other bands can we remember from the 90s? Nirvana, Candlebox. Ooh, Candlebox. They were a thing once. Rates are locked in. We're not going to raise rates. And by the way, we don't do anything. The $100 billion that is part of the Fed funds rate is some international arbitrage involving housing prices. Who cares? The war inflation is complicating everything. Paulo has come out. Paulo executive, COE CEO, coming out and saying, I think all the marks are wrong. Do you recognize that line? I said it last week. Private credit is falling apart. WTI did briefly pop above $100 a barrel. It has pulled back to around 96, but the U.S. struck Karg Island. That's a fun thing to say. The coalition of the unwilling, not a lot of nations taking us on our actions, but hey, come on. What's an arbitrary country we could name right now that could get involved? Botswana? Somebody's going to get involved. Gold actually hit 5,000, has fallen under. That is a huge red flag. We'll talk about that. NVIDIA has its conference over the next couple of days, very critical. The CEO will give a keynote speech at 2 o'clock. And again, everything is confirmed bearish. Breadth in this market is terrible. All right, so panic gripped the market. That means the market will probably go to 75,000 in the next 15 minutes. Reality is, let's be very serious. The VIX hitting 25.5. That's an elevated number. If you followed us over at Money Printer Pro, we have been mapping the VIX for the better part of 6 weeks, and it is at the top of its range. And the Fed is going to be meeting. We may get into the phenomenon that is known as the pre-Fed drift. That could take the markets just a little bit higher and give people a false sense of hope. Ugh. Realized volatility, according to Goldman, 10 days, 12%. Actual S&P 500 swings are actually calm. There is a gap between VIX pricing and what's happening with realized volatility. It's effectively telling us that the market is pricing in a sharp downturn, but it hasn't realized it yet. We have to pay very close attention to this. I wouldn't be looking for that type of move until after the Fed meeting, until after we get some information from the Bank of Japan. And we do have a couple of important earnings reports coming up this week, including FedEx. Only 2 of the last 10 sessions saw the S&P finish down 1% or more. The issue is we are round tripping a lot. And what I mean by that is we're going up maybe a percentage point, maybe a half a percentage point. We're coming down negative. We're rotating back up. This is the chop. Lower highs, lower lows. That's what you need to be looking at right now. So you get a pop, you get a drop, you see that we move below where we were, then you get another pop, and then you get another drop. What's happening is institutions are using these short-term pops in order to sell. The trend right now remains the same. Don't look at that advertising. Don't do that. We aren't sponsored by anybody. This is just the nature of people trying to target my computer. The trend lines have all rolled over. Remember, I was very bearish after that 8-day moving average dropped under that 20-day moving average. And if we look at a 30-minute chart, you see what I see, I hope. Lower highs, lower lows. We're getting to the lower end of this range, which means it wouldn't be shocking to see a pushback higher, some quiet, low volume movement that may take us back to the 50-day moving average before we continue that trend of lower highs and lower lows. Goldman predicting systematic selling of $36 billion, the trend followers. But I do remind you that markets don't just sell indiscriminately. They're going to look for a short term pop in order for us to move higher. The taco trade, Trump always chickens out. Traders are hesitant right now to sell because they fear missing a sudden reversal if Trump declares victory and the bombing ends. That's actually true. Trump is the weird momentum factor right now for the S&P 500. But if you don't want to have to deal with that, just look at the chart, look at the channels, lower highs, lower lows. We'll see where we are on Thursday. Easiest thing that I can tell you. That is the chart of the day. That is the fact that the VIX is spiking without the corresponding jump in the daily SPX realized volumes. It's just telling us once again, there is a systematic selling problem that can arrive. Goldman talked about that. But I'm going to just simply note at this very moment, you might look for the market to bleed a little bit higher into the Fed meeting. Use the key technicals. Look at the 24-minute, 60-minute chart. If we are squeezing higher, we squeeze higher. When that rolls over, when that 8-minute line on the 3-minute chart drops under the 20, that becomes your opportunity to go against the market. The Fed will meet on Wednesday, and I don't care. The Fed funds rate is between 3.5 and 3.75%. The secured overnight financing rate, SOFR, which actually matters, $2 trillion in movement in repo, 200 trillion underlying derivatives versus that whopping $100 billion in foreign basis trading, which is the Fed funds rate. We're going to get all hung up on the Fed funds rate. I'm telling you right now, it doesn't matter like it used to. It doesn't matter. We've got other things to do. The Fed funds rate is part of the illusion of central banking. The SOFR, where repo lives, where banks are going and pledging collateral for the purposes of borrowing to manage short-term positions, that's what our market really is. Overnight refinancing. The Fed funds rate, I mean, it's as useless as I'm going to make a horse buggy whip reference. It doesn't matter. Anyway, why the SOFR matters more than the Fed funds rate. The SOFR is the actual rate that banks pay overnight. The Fed funds rate is the target. The Fed basically traps the SOFR between a specific range by using policy. Lori Logan pointing out that these types of financing rates, she's out of the Dallas Federal Reserve. She said earlier, I believe it was September or October, that the Fed needs to really focus on that rate instead of the Fed funds rate. Mr. Powell, Jerome Powell, the Federal Reserve Chairman, saying earlier last year that they wanted to prevent another repo crisis. They've taken over SOFR. They just haven't told you. And SOFR is what matters. The Fed funds rate does not matter. Can anyone at CNBC hear me? It doesn't matter. And by the way, CNBC, PPI is not wholesale prices. I'm going to lose it at some point if you guys keep calling it wholesale prices. On December 31st, 2025, the SOFR spiked to 3.87, and the banks had to borrow $75 billion from the Fed in a single day. That's what that standing repo facility is. When the unsecured rate level, right, when there is no collateral being traded, like the Fed funds rate, when that level falls under a environment where people have to actually use collateral to borrow, that's a problem. That's like your local pawn shop demanding a higher return than your local mob boss who doesn't need you to put up collateral. The plumbing matters way more than the statement. I love Maryland in March. It is that cough that just starts to appear every morning Something is coming from our soil. Why does the matter still care about Wednesday? Because we have nothing else to do. I don't know. The dot plot will show up where each Fed governor expects rates to go. The markets trade on this. The language on inflation matters. If they mention oil, the market reads it as no cuts coming. The reality is, when it comes to the Fed, we still trade on all this information. We haven't changed. Even though the system has changed, even though the things that matter have changed, we still maintain this constant over 115 years. The markets changed fundamentally after COVID and after 2008. That said, Powell will have his presser at 2:30 on Wednesday. Every word on tariffs and energy and the war will be dissected. People will look at the color of his tie. And it's very important that you learn how to trade volume weighted average price, because volume weighted average price is going to give us these moves between these bands. That blue line is your volume weighted average price, first standard deviation between the first band, second band, third band. And when Powell speaks, if you find yourself down here in that third standard deviation, that's where you look for a squeeze. That's where you look for markets to react positively. Morale could not be lower right now. I do want to point that out. We have an extremely negative momentum environment. So even the most positive, like even if Powell came out and said, I think it's going to be 75 degrees and sunny on Thursday, the markets might actually take that well. After all this negativity, after all the downturn that we have seen, it's important to note that we can see 2, 3, 4, 5, 6, 7 point moves on the SPY right after Powell speaks. Then we move into the last hour, and that is where we're looking for a fade. All right. I'm sorry. All right. Today's calendar, pretty simple. CEO of NVIDIA will speak at 2 o'clock. This week, we have the Fed rate decision. Dollar Tree will report earnings. Consumer spending, that's what matters. It's very important to note that as we get into this environment, a lot of concerns about the consumer, credit card debt, everything that comes with it. Dollar Tree tells us what the lowest bound of the U.S. consumer is doing. These are people heavily in debt. Dollar Tree is going to likely set the tone for the consumer defensive stocks for the next 2 weeks. We also have the JP Morgan Industrials Conference, Delta, Archery, Aviation, Alcoa. These stocks have done largely okay, at least the industrials, not necessarily those names. But it's important to note that we are looking for themes in this market right now. We're looking for something to cling on to when roughly 90 to 95% of stocks are above their trend line, and there doesn't feel like there's so much to cling to. Last night, S&P futures were up. Where are we right now? Could be anywhere. Let's take a look. Come on, Garrett. You got it. 0.7 on the S&P 500. The NASDAQ is up 0.9. The Russell is up 0.9. So a little bit of a relief rally. But I will tell you this. Gold and silver being down the way they are, that is a deep concern for me, because there is no safe haven. And for reasons that still seem foreign to me, Bitcoin is up to 73,000. We've seen a lot of announcements that institutions are buying up crypto, which, okay, but here's the thing about that. Bitcoin has largely been a liquidity proxy. So my question is, where is the liquidity coming from and why Bitcoin? That said, we're up 3.4%. It could be covering, it could be a number of things. I still don't trust Bitcoin on the backside of the top of the liquidity cycle. I still own a little bit of Bitcoin, but I was buying it back during COVID. So I'm not going to make any rash decisions. It's the gold number that has me a little bit thrown off right now. And I wonder, are central banks buying, and what else is happening in the financial system that maybe we should be a little bit concerned about? Here's the line of the day. We should put this on our money. I literally think all the marks are wrong. That's John Zito, co-president of Apollo Asset Management, a comment to UBS clients reported by the Wall Street Journal on Sunday. The recovery estimates for some of this stuff is 20 to 40 cents on the dollar, a 2 to 3 trillion dollar private credit industry that is largely unregulated, and the gating is ramping up with BlackRock and Blackstone and Morgan Stanley. Apollo is one of the largest players in private credit, and an insider is calling out his own industry. He's calling it out the arrogance in private markets. He said that Jerome Powell is needling Trump. A generic company, a generic Joe software company loan might recover only 20 to 40 cents on the dollar. And it's that line. All of the marks are wrong. I said this last week. I said in the conversations that I'm having with people, they're saying, look, it doesn't have to be off by 15%. It's just the fact that everything is marked incorrectly, and that creates a lack of confidence. Maybe it's off by $5, maybe it's off by 2%, but it's still off, and that means everything is off. Is this MBS? We're about to find out. Other major managers are already gating redemptions. Bear Stearns' parallel from 2007 is getting a lot louder. And if the co-president of Apollo says the marks are wrong, the marks are wrong. It's an uncomfortable thing. But once again, incentives were created in the wake of the 2008 crisis. Private credit, regional banks stopped lending. Large banks stop lending. They start originating loans. Private credit becomes a dominant feature of low risk, high fees for the people who are running them. But everybody else is going through the same process that we've done over and over and over again for 50 years. It's not worth what it says, guys. They're trying to defend it because they don't want to be the guy holding the bag when the music stops. And it seems like every day we wake up and the music gets slower and slower. This is not the only crisis out there. Japan's a problem. Oil's a problem. Refinancing is a problem. We have a lot of problems in the financial system. But this is the one that can act as that extra snowflake on top of that mountain. And every day that we deny this is a problem, it creates a bigger problem. I have been screaming about this since October. So when this comes out and when people say, oh, yes, this is an issue, I throw my hands up and I say, yeah, I know. I know. I've been talking about it. People thought that I was fear mongering. This is how it starts. This is how a liquidity problem becomes a credit problem. This is why the 2008 comparisons are starting to pick up. And I don't think it's necessarily as bad as MBS, but it's certainly a problem. And this is one of the reasons why, again, our momentum signal has been negative since January 28th. I didn't create this signal to necessarily look for opportunities. I created the signal to help people get out of the way. And then we wait a couple of weeks and then we realize there's other major problems. We've been minus 43 right now. And yep, maybe we see a squeeze into Wednesday, but for the most part, the underlying pressure in this market is being driven by a massive number of problems that are compounding. Private credit is front and center. Speaking of other issues, WTI crude nearly hitting 100, pulled back a little bit. It did go over 100 for a brief moment. Gold's at 5,000. That makes no sense to me, but that's okay. The IEA planning to release all those foreign Western nations 400 million barrels, because why not? Trump has ordered strikes on military assets on Karg Island on Friday. That is Iran's major oil export hub. Oil infrastructure has not been hit yet. Trump has warned that he will consider hitting oil infrastructure if Hormuz stays blocked. Some chatter that Iran is willing to allow certain countries to pass their tankers through if they're buying oil in the yuan. We have roughly 9 to 10 million barrels per day that are trapped behind the strait. And if you see that happen for 10 days, that's a full day of international demand. We have 5,000 Marines that are being deployed to the region, and Energy Secretary Wright has said Americans will feel higher gasoline prices for the next few weeks. But I will say, guys, this is starting to become slow the spread. Said it day one. We were told it's not going to be long. Every day that continues, unfortunately, that's where markets start to lose hope. And that's how things can start to move exponentially very, very quickly. And that's how speculation can ramp up very, very quickly. The IEA has approved that 400 million barrel release that Wall Street Journal announcing that the U.S. is going to start the escorting coalition for the U.S. Navy to help move ships through the strait. The United Kingdom, Spain, Japan, China, Canada are not committing. Can't say I'm surprised by this. Oil CEOs, meanwhile, from Exxon, Chevron, and Conoco have warned that the White House, well, things could worsen. Pay attention to what the CEOs of the largest oil companies in the world are saying. There's probably only 5 to 10 people in the world right now that can run Exxon or Chevron. 5 to 10. And probably only 3 of them are available right now. I learned that from a headhunter back in 2017 while interviewing and understanding the illiquidity of CEO pay. I firmly believe that if I were going to write in a president at some point on a ballot, I'm going to choose the CEO of Exxon and Chevron. I'll get into that one day. I listen to what these CEOs say because they are running the backbone of the global economy. They know the relationships of all of the Middle Eastern nations. They know all the relationships of all of the Eastern nations. They're on top of this. And if they're warning that things can get worse, and if they're walking us through scenarios, trust me, they're doing this in their boardrooms right now. Trump's saying that Iran wants a deal. They want better terms. This is the gamesmanship and the game theory of negotiation. We'll see what happens. NVIDIA today, very important, 2 p.m. CEO will speak. The focus will be on inference, AI inference, and agentic AI. I've never heard that term. Sounds made up. And they'll talk a little bit about their partners, OpenAI, DeepMind, Meta, Microsoft, and Tesla. The Rothschild saying the real story is NVIDIA's 5-layer stack designed to squeeze hyperscaler margins. That sounds like it was written by AI. OpenClaw and NemoClaw. What is NemoClaw? The first major step to consumer scale agentic AI. Again, that sounds made up. Samsung is collaborating on next-gen NAND flash memory chips with NVIDIA. Stocks to watch today, AMD, Broadcom, Taiwan Semiconductor, TSM, and Intel. This is the one potential positive catalyst the market needs right now heading into the Fed meeting. Okay, so what is Triples telling us? Well, Triples is best. You already know that. This morning, we're at minus 43. We're yellow on this divergence number. That means that the market's getting a little bit of legs today. Doesn't mean that we're on a full-scale recovery. It just means that maybe we get a little bit of relief. We get a little bit of a squeeze. Once again, looking for pre-Fed drift. If you've never heard of that, there's plenty of academic papers written about this. It used to be a historical phenomenon. It's calmed down a little bit. But you should look for upward bias heading into the Fed meeting. Positioning is going to start to, over the last couple of days, but really today, tomorrow, where institutions basically hedge their bets ahead of Powell's speech. That comes at 2:30 on Wednesday. I'm going to be live because why not? We'll cover that full hour. We'll give you an opportunity. We're going to be on YouTube and we're going to be on Substack for that. Looking to put together a chat room for everybody. But right now, we are still negative, and we still have a large number of negative catalysts in the market. I did a full video on every one of them yesterday. If you didn't get a chance, check it out. Only 29% of stocks are above their 50-day moving average, which is just manic. So it's actually 31 right now. Here it is. It's on FinViz. That was last night. But that's not good. That breadth is brutal. Number of stocks hitting new high 48, 31 hitting new lows, above their 200-day moving average, just 41%. But right now, pre-market, large number of stocks advancing 42% versus 12% that are currently down. Look for pops and then funds to use any strength to sell. Hey, that's the end of the show. Oh my gosh, it went so fast. Me and the Money Printer is available on Substack. As always, it is free. We have Money Printer Pro, which is our paid letter that includes an extra video each morning, a full rundown of what's happening in the markets on top of the tools that are available, like Capital Wave with our day-to-day metric that you can look at. You also get to see screamers and crashers, the stocks that are breaking out and breaking down, and you can do a deep dive into virtually any stock that you are interested in to understand where it sits in a momentum cycle at any given moment. So don't go long Apple just yet. Look and pay attention to the fact that this is still breaking down right now. Follow the momentum, follow the rules. Be very, very excited about the opportunities that are going to come on the backside of this Fed meeting. Money Printer Elite is for people who are basically our founders on Substack, just so that everybody knows. It's an extra $100 a year, but it includes a couple of cool things. One, you're going to get access to new tools that we're creating here on moneyprinterpro.com. In addition, you'll be a part of the meeting that will take place on the 28th. I'm going to host a 1-hour session. I do a quarterly session with those members. And I don't know, we'll probably put together some special reports as well. Postcards from the Edge of the World came out yesterday. I talked about the healthcare sector at length. Take a look at that. It's a little bit of a different story, a different type of letter. I tend to focus on problems within choke points in the global economy. It's a little bit more political science than most people are used to, but it does have a equity portfolio. There are currently somewhere between 12 and 13 stocks, and that portfolio is actually a week ago was up 10 percentage points over the S&P 500. Focus on a lot of cash, focus on inflation protection, a lot of opportunities there. Insider stock buying, we have a report on insider purchasing as well at Substack. InsiderStockBuys.com is free. We put that together last week. That's a new tool that is going to be live starting next week for our insider buying report members. I hope that everybody has a great day. I will give you the website so that you can purchase your own Me and the Money Printer Lite. If you have any questions, reply to the email or just do me a favor, hit me in the chat. I hope everybody has a great day. We'll catch up soon. Take care.